Welcome back to Fortress Education. This is Zed. Today we're going to be talking about Wish. Now this ticker here has took a beating this week, but in today's we're going to be talking about a bit more due diligence, specifically towards their earnings and some of the aspects relating towards this stock, relating towards growth and revenue as of recently. Now I'm also going to go towards technical analysis, institutional buyers, and what I think about this one. So without further ado, let's jump right into this one. So Wish. I covered this stock before, my previous video is in the description below, but let's take a look into the last piece of news that we have, which is the earnings. So second quarter 2021 financial earnings. Now you probably have seen this piece of news already. So let's dive in a little bit into the SEC filing. And this one here is the quarter 2 2021 highlight, and it reads as follows. Dear shareholders, after a strong start to the second quarter of 2021, demand slowed down due to a number of headwinds. In response, we're implementing a plan designed to ensure the long-term success of our platform. Total revenue declined by 6% year-over-year to only $656 million. Strong year-over-year growth from logistic revenue of 126% was offset by a 29% year-over-year decline in the marketplace revenue. Overall, we expected user retention to improve now that we have a more reliable logistic, but instead retention has declined. While we are not satisfied with these results, the second quarter of 2021 was already going on to be a challenging year-over-year comparison. During quarter 2 2020, we benefited from a single increase in mobile usage and less competition from physical retail as a result of the stay-home mandates that continued throughout much of the year. So what does that mean? So this couple of paragraphs at the start talks about the quarter 2 2021. First off, they're saying that their logistics has increased by 126%, but their retention or their marketplace revenue decreased by 29%. In addition, they expected that the retention would improve, but their retention declined of the customer retention, returning customers. And you get to see as well that during 2020 quarter 2, they were saying because of the at-home orders, people were staying home, physical stores were closed, and people were ordering online. So it was already a tough play to start with. And then they talk about it from a macro perspective. As vaccines rates increase, stay-at-home orders begin to ease, and economies start to move broadly reopen the world, daily user activities declines. And even particularly in the US, France, and Italy, three of their largest markets, in fact, they saw a 13% reduction in app installation and a 15% reduction in average time spent on the platform from quarter 2 2021 compared to quarter 1 2021. And then they move on as well towards Android and iOS and driving competition. And then they also go on towards some of the following initiatives that they hope to increase retention and improve user experience. So the first one here is enhancing product quality and selection. Wish users should always feel satisfied with their purchase. As we improve logistics, product quality issue became the #1 reasons for customer service requests. Under a new quality score system, we are now prioritizing products and merchants that receive positive rating and feedback from our users. We also are adding more global recognition brands and items that users know and search for, which we believe will drive more frequent purchases and high averages order values. Since Wish was built as a discovery-based e-commerce shopping experience, we're focused on product selection on categories like apparel, home goods, gadgets that translate well into the online treasure hunt experience. We will leverage our user activity to strategically select attractively priced quality products that we believe we delight our users with. And number 2, providing an unmatched fun and entertaining shop experience, which users should always feel a fresh feed of elicit a joyful feeling, as if they have entered a store that prominently displayed only product that piques their interest. To meet those expectations, we're investing further in a platform for data science capabilities to develop a more engaging, personalized, discovery-based online shopping experience. Next, 3, improving the performance of the app. So this is just really just performance improvements. It's self-explanatory, don't need to go through that. And then they go on towards some of the results relating towards the core marketplace. So the core marketplace revenue decreased 32% year over year to around $378 million in quarter two, primarily due to lower order volume and conversion of new buyers. Active buyers during the quarter declined 44% year over year to 17 million. Core marketplace revenue per active buyer was 22, an increase of 21% year over year. So the revenue per active buyer increased around 21%, but 44% of the active buyers decreased. So that's kind of an insane amount, kind of offset a little, but it really shows you that at-home stay orders definitely did make an impact for online shopping at Wish. Now, on a year-over-year basis, the core marketplace revenue decreased 21% in Europe, 44% in North America, 29% in South America, and 21% in the rest of the world. Now, Product Boost revenue increased 11% year over year to $50 million, driven by merchants increasing their advertising spending with us compared to the prior year period when advertisers pulled back as spending in the pandemic intensified. Now, logistics as well, in terms of their growth, 126% year over year. That was $228 million of their entire revenue. So let's take a quick look. So we're talking about $228 million in revenue. Their total revenue, in fact, was around $656 million. That means that 1/3 of almost their entire basically income or revenue goes to logistics. That's $228 million. Out of that, only basically a little bit more than half goes to the marketplace. So what really started as a marketplace company is really starting to see a decrease in the core marketplace and an increase in Product Boost and logistics revenue. So basically logistics and marketing. So that is something that is very interesting. Now, if we were to take a look into a previous presentation, we're able to see that kind of decline in revenues a little bit year over year, and then improved in quarter two 2020, and then declined in quarter three, and we get to see a little bit of a shaky time right now. So currently their net loss is around $111 million. That's massive. That's 17% of the net revenue. Last year, quarter two 2020, again, I would explain the differences there. It was only $11 million loss and around 2% loss of revenue. In terms of revenues, it is almost the same, 656 versus 701, but the percentage of that revenue increased significantly. A big part of that is that the core marketplace decreased from $555 million to $378 million. So the marketplace revenue decreased significantly, as we get to see, but logistics revenue increased more than double, or 126% to be particular. Now, before moving on forward, if you would like to see more content like this, make sure to click the subscribe button on the bottom right corner and leave notifications on. A lot of you amazing folks watch my videos but never click that subscribe button, so please do so. And don't forget to drop a like to this video, and if you would like to join our Discord, it's in the description below, totally free. Now, a bit into relations to other things, such as institutional buyers. Institutional buyers remain mixed. So today, APG Assets Management increased their position by 75.8%, making their total value of the stock invested around $38.5 million. That's around 3.467 or 3.47 million shares. Vidant Investments added a little bit of shares. Vanguard added or increased their position by 545.75% at a total value of almost $85 million. Now you get to see some additions, some divesting of the company, but that's almost normal to see a little bit after different earnings perspectives. Now, on another thing, on insiders, take a look into who this is. This is Just Brett. This is the interim co-CFO. And you're able to see that yesterday, Just Brett sold a bunch of his shares at 10.460 at 1,000 shares only. So a lot of people took a look at that and said, hey, a co-CFO is divesting. He only sold around 1,000 shares, which is nothing compared to his remaining around 37,000 shares. So this is not a warning sign. So a lot of people need to really take a look into what the news actually says relating towards this person selling. They're not running away from the stock. They only made what? $10,000 on that out of entire value of 37 or 38 more times than that they're still keeping. Now, on another thing that we want to take a look at is their current short volumes. So short volumes on this one is quite high. sitting almost to 60%. That means on a total volume almost at any given day, the majority of the transactions being done is on the short side. So that's something to really keep an eye on. Now, in terms of the short flow, that's only around 8%, but the short volume really gives you an interesting view on the entire volumes as a whole going to either selling or buying. Let's move on towards technical analysis. Now, from a technical analysis perspective, now keep in mind that definitely because of horrible news leading towards these earnings and stuff, it's definitely going to look bearish on a multiple views. So I'm only going to take a look at key parameters today. So first off, the moving averages, of course, are looking bearish because of this massive drop. It's 20%. There's a short sell rule, means short selling is restricted for the next 24 hours as well. So coming in towards also Monday counts because business hours count as well. And in terms of everything else, it's highly oversold. Well, the momentum is negative. As you get to see, it's dropping. William percent R shows oversold, and MACD is on the negative side. And what does that really mean? It means that there is some momentum, not very strong, but there is some considerable momentum going on towards the negative side. But as you get to see, the stock went from 669 to the lowest today to 744. And that is indicative to one thing. There is a pulse on the stock. A lot of people want to ride the bounce, and that could be a little bit problematic, and I'll refer to that to the very end first. But from a stochastic fast and slow, both are pinpointing downwards, signaling in you need to take a look for the next supports. Now, on the moving average parts as well, the price point is below the moving average bands and the Bollinger Bands. So what we can expect is for it to bounce back into closer towards there. You get to see that is something that probably would happen from this drop. Currently, the bottom of that is around 841 for the Bollinger Bands. And if it does bounce back, it probably would see somewhere around low 8s or high 7s. That's where the range we're looking at. In terms of the Fibonacci retracements part, you're able to see that there is no current support other than the 699. We're going to take a look into an hour perspective, but taking a look into a Fibonacci retracements because institutional buyers use it. The current resistance is around 1308, 1686, 1991, 2297, 2731, and 3285. Now, from price line action, we're able to see significant resistance currently plaguing this one at 759, above there 882, and then going up to 943, and then upwards to around 1074, going up to around 1159. And then from there on around 1352, and then 1474, and then we raised that up a little bit to around $20, and then 2387, going to 2747, and then upwards to around 3022, and then $33. Comes to the question to Ed, what do you think about this one? Well, from my own perspective, from what we've read today and what I presented today, I do believe that they are really trying to go towards a more elegant kind of marketplace. They're really trying to position themselves somewhat as an eBay, Amazon, AliExpress kind of way. To be in particular, probably more around AliExpress. The quality for Wish, and the main thing where I've seen from their advertisements is get an item that might not be, for instance, Nike. It could be Nike with an M, or an N with an apostrophe on the I, and that's kind of the brands you get. But in this respect, they're trying to get into a better quality system because they're saying, hold on, maybe it's not really sustainable to start selling these off-branded items or generic items. And from their own perspective, they're trying to increase that quality by giving some rating system. Now, that might actually work, because how many times have you ordered something and the thing doesn't look like it's actual advertised? And they're trying to fix that because they're realizing before, that probably was not an issue. Now it is, because they're losing people, losing market retention. So that could be done and fixed up on the market retention by advertisements relating towards those plans once you see them. But what do you think about the sticker? Make sure to mention down in the comments below. Share, subscribe, and like, and have a wonderful day. Now, if you're still here on this video, make sure to drop down below and join our Discord. We have a lot of different things going on, including, for instance, members that gives picks for free. It's not pump and dumps, we just things we think about, swings, etc. We also have really exciting bots. You can actually use those ones. For instance, we're just testing out this bot, for instance, that gives you Fibonacci resistance points, activities, etc. And we have a bunch of free things, totally free. We run on tips here, and you can ask me questions, suggest stocks, etc. It's a really nice community that has been growing up very fast at a very good rate, and it's totally free. If you would like to join that one, feel free to do so in the description below, and have a wonderful day.